an important global voice, an FII who invests very closely in India and has been doing so for a while. Can we go across to Jonathan Schiessl and get in a quick word? Well, he's seated and right here in our studios in Mumbai, having a very, very busy schedule. Hectic. Jonathan, hectic.
Very much so.
Yeah. Has it really been about Infosys? You not perhaps planned it to be around Infosys, but has it really been about Infosys this time?
Yeah, I think discussion certainly is very much, everybody can't help talking about it. So yeah, it's obviously like a ping pong game. It's back and forth. So every day there's something new to think about. So yeah, very much focused on it.
But does that deter you on your view on Indian IT as a pack? Because, you know, sectorally as well, things are not really panning out the way they would be. We still don't know what the Trump administration stance is going to be on H-1B visa. There's pricing pressure. The fundamentals are not favoring the sector, aside of what's going on internally at Infi.
Yeah, so I mean, if I'm honest, we were wrong, right? So we've been increasing our weight of IT over the last 2 or 3 months. I mean, where do you find value in India? For us, it was more about diversification as well. It's a sector we feel is underloved, underowned. Bit of volatility potentially coming in the world with what's going on in the US, let alone the visa side. And we felt that perhaps it was an underowned sector which might just offer a bit of value. Obviously, we've been wrong on that one, you know, particularly around Infosys. Some of the other stocks, okay, have done fine, but it's an area which is still suffering.
How much do you hold in Infosys?
About 6.5%.
Wow.
So it's a reasonably large position.
Yeah. And so what are you going to do about it?
The $64 million question.
No, but you know, so here's the two sides, right? One class of investors believe that this could be a great opportunity for the stock, especially if in the transition you come up with a leader who can bring you know, the confidence back into the future of the business. And then, you know, secondly, the view is, of course, the very obvious one that this is transition. Transition comes at a price, it comes at a cost. So stay away because the stock is down below 900.
So there is value there. So the trouble is it moves so fast, the stock price, that it was very difficult to rationally think about what was going on and then obviously trade, because people just, you know, were straight cutting, big double-digit moves. So I think there's real value there. But of course, it takes a management team to extract that value, and of course, then you need the global factors to slot into place as well. Sure. So for us, I think we're probably likely to be a bit more patient with it. It's very difficult to sell here.
But as such a large investor in Infosys, I mean, forget the timing of when you invested and whether the call has come right or not. Are you happy with the developments internally? The fact that Vishal Sikka has exited, he stepped down, and now that maybe Nandan Nilekani, the old poster boy, may actually make a comeback?
Look, from an outside perspective, obviously the governance issue, there's always this perception that promoters who step away from the business can't quite, you know, detach. Yeah. And we've seen that with a number of Indian promoters, unfortunately, over the last few years. I think, you know, there's two sides to this one. There are some valid points the promoters were making, and on the other side, you know, they brought a new guy in, was pulling the company in a new direction, which I think most investors were quite excited about. So, you know, we see two sides to it. For us, if there's a genuine governance issue, we'll exit the stock without a shadow of doubt. So we're spending a bit of time looking at that just to see.
But how would you qualify a genuine governance issue? Because so far the 3 points that have been highlighted, you know, whether it's about playing Bansal a huge severance package, whether it's about the Panaya investigation, or for that matter, you know, some of the targets that have been set internally seeming aggressive. I mean, what would be a qualifier for a governance problem? Because so far it just still seems to be on the surface. Nobody's given us in-depth details that there is a structural issue at the core.
I think that's the problem. You know, ultimately it's very subjective, and because you haven't got substantial or proper proof of stuff that was going on that shouldn't have been going on, it's just more rumor at the moment. We can't act on rumor. You know, that's not our style. So until we see something more substantive that actually, you know, is definitely there was wrongdoing. Now, of course, you know, the changes come through, so potentially that's all in the price, and unless a new regime ushered in, what was going on before could be stopped if there was wrongdoing. So maybe, it's too late, quite frankly.
But with Nilekani coming back, do you think that can override the concern on governance and perhaps make you look at increasing allocations to Infosys?
So I think so.
Okay.
I guess the question is what the strategy of the company. I think ultimately was going in the right direction. It's been pulled in the right direction. What I don't want to see is suddenly a massive 180-degree turnaround in strategy. Times have changed. Infosys needs to change.
Have you spoken with anyone at Infosys though? Because there are panicked investors who are making those calls, writing those letters. Have you had a word from anyone at Infosys?
We tend to sort of
stay away.
We do get involved sometimes. I think the reality is that they're not going to tell us particularly anything that they're going to. It's so. We try to stay one step away.
But it's very interesting, Eicher, that Jonathan, you're pointing out that Nilekani's comeback can mean that you will relook at the stock and perhaps potentially even increase allocations because that's the kind of impact, his reputation can have in furthering ties with clients and building contracts, and more importantly, he's a troubleshooter. And that's what he can do for change in perception. So that's very interesting to understand. There's so much else happening in the markets in India. Let's talk about the banking space. Yesterday, we had the government talk about the PSU bank consolidation. So 2021 banks will get shrunk down to 10, 12. Good way forward. Is that an opportunity for you? Because PSU banks are so cheap, but for a good reason.
Well, that's very valid. So the worry, I've seen this before in other markets. You collapse 10 bad banks into one huge bad bank. Yeah. Does it solve the problem? I mean, you just get bigger bad banks that have more clout.
SBI has done it, fairly efficiently. They've absorbed these 5 associate banks, and I think that's where the government is taking an example from. Look, if SBI could do it in a less troublesome fashion, then maybe the other banks can do it as well.
I guess, though, SBI has a better balance sheet than perhaps some of the others. So,
and there's a reason why they do.
Yeah, so it's... For us, we've not looked at PSU banks for many years. They're cheap, as you said, for a reason. Until we see change on a management level, and obviously there's still NPL issues and capital balance sheet issues that we'd like to see addressed. It's not a sector we're interested in.
What's the view in India, though? Just about everyone is waiting for that correction to happen, which clearly seems to be evading us right now. And, most believe that if there were to be a significant correction in India, that's going to have to be derived or coming in from a global factor. It would have to be something between Trump and North Korea, and that would then lead to that fall.
So I think foreign investors still are very much, if you're not in love, but I think India
committed.
Stands out. Still very stands out. I don't think foreign investors are here in a great way. I mean, if you look at flows, it's the domestics these days, isn't it? Yeah. Foreign investors have been selling the last 4 or 5 days consistently, and for us in particular, every day virtually, I get traders coming on board. We've got stock, and if you've got this stock, we know you're in this position, we'd like it. They've got domestic investors sniffing around. It's like, no, I don't want to sell. So that's quite interesting. So the India story still is a very compelling one from a foreign investor. I mean, we're looking at, you've got Brazil, you've got Russia, you've got the globe to invest in. So India stands out. The biggest criticism that I always get is, how do I get my head around the valuation? And that's, I think people who don't understand India just cannot comprehend the valuation. For us, we're quite comfortable with it. But of course, I'd love it to be cheaper. But it's interesting when you say about a sell-off, because, for example, demonetization, what a great time to buy. I was on the phone to clients, to a lot of people saying, you've got to buy medium term, this is potentially very rewarding. The feedback at the time was, Modi's made a massive gamble here, he's going to slip up, this market's going down another 30 or 40%. So nobody bought, and then the thing screamed up and everybody's got their
There's a reason why this is the most hated bull market, because not many, were able to participate.
Yeah, but the August data suggests that FI has been selling consistently, and this has been the worst month in terms of FI flows into the market. I know valuation is one concern, but is it really about being cautious on global equities? Because valuation is a global concern. It's not just an India issue, right? So is it really about, look, we are closing out the year, the markets have overextended themselves, it's better to be cautious? And we were having this conversation with Harvard Marx a few days back, who in his recent memo, which I'm sure you've read it as well, has sounded a note of caution that, look, scale back. I mean, it's okay to be pro-risk, but it's not okay to be aggressive. Is that largely your strategy too?
So, yeah, I mean, we in our developed market positioning are much more cautious. So we're very underweight the US. Now, has that been the right call? More recently, perhaps, but we were a bit early in that trade as well. We see more value actually in emerging markets generally. I think EM's done well this year, hasn't it? And India, to our mind, people say India's done too well this year, but actually the prior 2 years were quite frankly pretty poor for India. So to us, there was a bit of catch-up trade in India this year. But I think absolutely there will be global risk appetite, global worries about what's going on with the Trump administration, as you rightly say, North Korea, et cetera, et cetera. Then even on the fringes, people hear about this border issues between India and China. It's another little factor that niggles away at the back of their minds. I think everybody wants to buy India, but everybody would like to see it a little bit cheaper.
What else do you own in India? I understand that there are also financials like Capital First, HDFC. Those are comfortable positions, I'm sure.
Absolutely. Those are the sort of positions which you can just quite frankly lock away. I mean, one of the great things about the Indian market compared to other emerging markets is this compounding type of return you can get in India. But you've got to be patient. You've got to accept a bit of volatility from time to time. But these stocks are absolute compounding machines. And really, from a foreign investor, when we look at this stuff, you get a quality company with quality management. You don't need to get too clever with it.
But that's not the case with, Motherson Sumi, which is your other holding, right? Because they have that volatility because of the US Class A truck orders, etc.
Yeah, I mean, that's true. So we do have some positions which have some cyclicality in it, absolutely. I mean, Motherson obviously is a great play on electronics, more electronics going into cars, electric vehicles. So we see it as a winner, but ultimately it's not really an Indian company these days, is it? From a turnover perspective, it's a global player. It's also in so many other parts of the auto sector as well. But what a brilliantly run company. The vision of the management, and of course even there. The ambition of the management of where they want to take that company. And
so you're okay dealing with the cyclicality and the volatility in the business cycle?
Yeah, we try and time it. So I guess that we have a core of positions that we're just happy to stick with. But of course, the market changes, the market twists and turns. We try to be diversified. We don't want to be 70 to 80% in financials. Financials can be a brilliant sector, but from our perspective, sort of portfolio management perspective, it's good to have exposure to other sectors. And quite frankly, people say to me, why do you own Infosys? It's been a dog forever. Actually, I quite like having the odd dog in the portfolio because...
Actually, the second name that comes to my mind is Reliance Industries, but the elephant has moved now.
Yeah,
I mean, if somebody owned Reliance Industries for 5 years, I mean, they would have made the same...
test your patience.
Yeah, and they would have made the same comment. But finally, the patience has paid.
Yeah, and we don't own the counter, so it's been quite painful.
Are you intending on owning it?
Probably not for the moment.
Okay. Okay. So in your two high conviction ideas are HDFC Bank and Eicher Motors, I reckon. Is that the case?
So we don't own HDFC Bank. We obviously own the parent.
Yeah.
Okay, HDFC and Eicher Motors. That'd be. What have you sold in this market over the last 1 month? Of course, in terms of disclosed scale backs.
I mean, we try, in all honesty, when we meet investors, I say in an ideal world, I'd love to come in with this, we've got a concentrated portfolio, so no more than 30 stocks, generally 25. I usually say, I'd love to come back in 5 years and show you that we haven't made a single change. People say, what have you been doing all the time? Twiddling your thumbs. But it doesn't work like that, of course. Things change.
Enjoying the compounding.
Absolutely. So more recently, we have actually tried to put a little bit more cyclicality back into the portfolio. So I'd say last 1 month, we haven't been particularly active at all. But more recently, we've sold a couple of the consumer names which are trading at eye-watering valuations. Now, we're not thinking those things are going to derate, because they are great stories, absolutely. But it comes to a point where you can buy better. You can see better relative value elsewhere.
What within consumption have you sold, considering it's such a large umbrella we're talking about?
It is a massive umbrella. So we've had nothing in staples for a long time. So for example, Whirlpool of India, fantastic company, brilliant runway ahead. But at the current valuation, a lot of it's in the price, sort of into perpetuity almost. They're assuming growth rates which the company might hit. So we've taken a bit out of the more expensive consumer sort of type of names, and we've switched into a few months back, not 1 month back, in Dalco. So a bit of more cyclicality into the portfolio.
I could have been wearing a blindfold to guess that choice, because my next question was really about Tata Steel and the commodities rally that we've seen. And add to that, I don't know whether you held Tata Motors, but has that been an exit strategy if you did own the stock?
Yeah, so we're still in that stock. We cut the position back quite aggressively a few months back.
Okay.
It's difficult because you do look at the model lineup. It is quite attractive of Jaguar Land Rover. But obviously worries over China, continuing worries there. You know, obviously everybody focuses on the monthly numbers so much. But the model lineup to us looks quite attractive. But yeah, it's been not a great place to be. I mean, my goodness me.
Testing your patience.
Yeah, it has. It's making me sound that this portfolio is an awful portfolio. Talking about Infosys, Tata Motors. We do have some good ones in there.
You have HDFC.
And Eicher Motors.
And Eicher Motors. And Capital First. But what else is it that you're looking at when it comes to India? You know, because just yesterday I was talking to one of the very large mutual fund houses who also run portfolios as concentrated as yours, 25 to 35 odd stocks. And they were saying that insurance is the next big thing when it comes to India. There's only one listed player up until now. There are many others who are filing their DRHP as we speak. Is that the next big space, you think, wherein maybe aggregators, fund houses themselves, that's something that you could bet big on?
No, I think you're right. I think clearly when you look at the top-down side, there's a massive growth potential in that sector. And then, as you rightly say, there's such a paucity of choice. You know, there's so few. There's one listed player at the moment, so it is difficult. So the premiums these guys are charging, you know, obviously, you know, it would be interesting to see what they list out, some of these players. But I think general insurance looks interesting. The whole insurance sector does look very interesting for this market.
What about retail? Because, you know, we've been talking about Avenue Supermarts, you know, rallying away to everybody's
Talk about expensive stocks.
Yeah, we got that one wrong. So we did a lot of work on that and decided I just couldn't. The valuation just kept us away. It's one of those silly, you know, sometimes you just need to bite the bullet, and it looks good. You know, it does look good. I mean, you know, we have some exposure to retail via Phoenix Mills. We've owned for many years. You know, and that story is an interesting one as well. With, you know, you just have to walk around, obviously, the Palladium Mall around here. Look at the brands. It's extraordinary, the brands.
Look at the footfalls.
Great, Jonathan. It's been such a pleasure to have you in our studios in Mumbai. You should come more often. You should be here more often. But thanks very much for my time.
Hopefully, we'll have better stories than Infosys to talk about.
Actually, in the overall picture, you look at Infosys and Tata Motors. Largely, your portfolio otherwise is pretty sound.
Yep, absolutely.
Okay. Thanks very much.
Till next time, man. Good chatting with you.
Find us on Facebook at facebook.com/ETNow, and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/ETNow.